This presentation is brought to you by the MFOA.
Hello everyone. Welcome to MFOA's webinar entitled Social Housing 101, Fundamentals for Municipal Finance Staff. Social Housing 101 is a two-part webinar series whereby part 2 will be delivered next Wednesday, October 22nd. You can still register for the free webinar should you decide to learn more about social housing challenges now and on the horizon. And now I'd like to introduce your presenters. Eric Freiler has been working in the affordable and housing field for over 30 years, most of which has been with the provincial government. And prior to her current employment with the Ministry of Municipal Affairs and Housing, Erin Mifflin worked in the municipal housing field for over 7 years with the City of Hamilton. Both Eric and Erin work in the Ministry's Infrastructure and Asset Management Unit of the Housing, Funding and Risk Management Branch. Deb Schlichter joined the Region of Waterloo as Director of Housing in June 2009 and is currently responsible for a portfolio of approximately 9,000 community housing units that are either owned or overseen by the region, and responsible for implementing the Region of Waterloo's affordable housing strategy, which to date has helped create more than 2,000 new units of affordable housing in the community. Previously, Deb spent 25 years working in the not-for-profit sector, with 11 years as Executive Director of House of Friendship and local multi-service charitable organizations serving those living in poverty. These 18 programs, including emergency shelter and affordable housing programs. Deb also served 3 terms on the Board of Directors of the Ontario Nonprofit Housing Association, where she held several roles including President and past President, and has been involved in a number of housing and homeless networks. Deb's passion is housing, with the belief that everyone needs a place to call home. We're very excited to have them here with us today. Thank you, and let's get started. Eric?
All right, thank you very much. Eric Freiler here. I want to thank you first for joining us in terms of this webinar. On the very next slide, I'm going to start off with the difficult stuff first. Social housing, the basic concepts of social housing are pretty simple, but it gets kind of tricky when you talk about its implementation and administration. So I've been advised to advise you that we do have a legal disclaimer here, and that this is what we're presenting is really just a general overview that summarizes, deals with complex matters. We don't have all the details, although we have quite a bit. Parts of this seminar are going to refer to laws and practices which are subject to change, and I remind you that you're responsible for making your own decisions and that you consult with your own legal advisors when appropriate. Now I'd like to move on to the next slide, Webinar 1. This is the first of 2, and the outline of the 2 webinars are on the next slides. Today we're going to be talking about the fundamentals. What are the roles of the key players in the social housing world? What's the relevant legislation and agreement? I'm going to discuss some of the financial aspects and the money matters, and we'll give you a very short history of social housing. A week from today at the same time we'll be doing another webinar where we'll be talking more forward-looking to the future in terms of what social housing challenges will be and what opportunities will present themselves in the future. With respect to service level standards, the decreasing and eventual end of federal funding, the physical stock, and social housing as an infrastructure item, as well as a little more about asset management and opportunities for municipalities to readjust their operational subsidies and financing, and we give you an opportunity to discuss some other issues and opportunities. This first webinar is going to be quite detailed. It's a bit dense, we recognize, and it's kind of dry, unfortunately. We're quite in the weeds on this one, but it was a conscious decision on our part to give you as much information as possible so you get a sense of the full, larger picture. We've had questions in the past from municipal staff who want to, understand some of the complexities around social housing. So we wanted to put as much information as possible into these slides. It also should serve for you in the future as a reference material. On the next slide, we're going to just a quick overview in terms of what we're hoping to attain in these 2 webinars. We want to give you information about social housing, obviously to municipal staff, to new people in the housing field, and to maybe as a refresher for people who have been around a while, who have forgotten some of the details. Also, we want to, as I mentioned earlier, talk about some of the current housing challenges and opportunities, and to provide information to better understand the broader provincial and federal context. Also, we're looking to encourage discussions between municipal housing and finance staff. We've had finance folks from municipalities approach us in the past, depending where you are, of course, saying that, once a year we get involved in social housing because of the social housing number we need for the FIR, but beyond that we don't really understand a lot of it. I know that changes from municipality and service manager area. On the next slide, we're going to talk about social housing in the broader municipal context. Slide 5. Yes, thank you. Social housing is one of the many, as you know, social housing is one of the many housing and homelessness responsibilities for municipal service managers. Under the recent long-term affordable housing strategy put forth by the provinces, service managers, including DSAPs, administer social housing as per the Housing Services Act 2011. That's a fairly recent legislation and replaced an earlier act, and we'll get into that a bit more later. Service managers work closely with social housing providers. They issue consents, the permissions to providers to do certain things. They deliver housing and homelessness programs and create and implement housing and homelessness plans, which are now required under the Housing Services Act. And obviously, and importantly, they provide the local leadership for social housing and housing in general. We also recognize the municipal sector currently pays about 2/3 of the total operating costs of the social housing. On the next slide, I'm going to give you a very fast overview of the long-term affordable housing strategy. If we could move to the next slide. Thank you. I'm not going to go through it now, but this you can use as a reference. The strategy is a fairly recent undertaking by the province. I believe it's the first of its kind in Ontario. Essentially what it did is it clarified roles and responsibilities between the province and municipal service managers. In short, the province is operating on a go-forward basis as a system steward. We provide sort of the overall vision and provincial interests for housing. We set the legislative and policy framework, contribute provincial funding. We report on the progress at a provincial level and as well as to the federal government. We're the single window for social housing matters to Canada Mortgage and Housing Corporation, which is our federal partner. And we ensure that financial accountability is in place through service agreements. Municipalities, of course, set the local vision, reflecting what we hope will be, hopefully reflecting the provincial interest, obviously providing local leadership and developing and implementing strategies. Above all, you're administering the actual housing and homelessness programs. You're reporting to us at the local level and obviously amongst your, on your own local requirements. And you engage local communities and to determine needs, priorities, and develop local and housing and homelessness plans. On the next slide, provide you a really basic overview of what is social housing. Social housing is rental housing that's affordable, adequate, and suitable for people with low to moderate incomes. Many units in social housing are rent geared to income. It's a term you'll hear a lot, the so-called RGI unit, which means the rent is capped at 30% of an eligible household's income. So if a household that meets the eligibility requirements, they will pay no more than 30% of their income. Social housing units fall under the legal authority of the Housing Services Act 2011, and there's an agreement between the province and the federal government, which is called the Canada-Ontario Social Housing Agreement. Again, we'll talk about these a bit later. In 2013, service managers paid, as I mentioned earlier, almost 2/3 of the total cost of social housing across Ontario. The majority of the remainder is paid through federal transfer payments. You may want to know that there are different kinds of social housing. There were housing in the past which were owned by Ontario Housing Corporation, which are now owned directly or indirectly by municipalities. There's still municipal and private nonprofit corporations running social housing, as well as cooperatives. Because social housing has been around for decades, there are lots of different versions of social housing programs over the years. There were some programs programs that have been just federally funded, delivered by the federal government. They still exist. And there are also at various times provincial unilateral projects where the province initiated and paid for 100% of the programs. And so those are considered provincial unilateral projects. Not all the units in social housing are rent geared to income, or RGI. A good percentage of them are market units. In other words, the people are renting at what is usually the lower end of the market for that area. And that's the maximum rent people would pay in the project. In the next slide, I'm just going to walk you very briefly through some of the benefits of housing. Obviously, housing is important for healthy communities and families. Where housing costs take up a disproportionate amount of disposable income, social housing and affordable housing can offset those challenges. It also frees up the energies and the dollars required for households to address other priorities such as education and employment outcomes. Housing is an efficient and effective use of resources in that affordable housing is cost effective. One RGI unit subsidy is about $613 a month on average, compared to a shelter bed which would address homelessness at approximately $2,100 a month on the average. Housing is also proven to be very important for a strong economy and for creating jobs. Investing $100,000 in housing repair, for example, creates 1.8 jobs, while construction of a new housing unit creates approximately 2.2 person years of employment. It's also worth noting every dollar invested in housing is estimated to generate $2 in direct housing-related economic activity. On the next slide, I'd like to walk you through just a brief overview of the differences between social housing and what's called affordable housing. More recent, in the past 10 years, affordable housing has been the focus of government, and it's normally governed under the RTA, the Residential Tenants Act, for the rental parts of affordable housing. It's been funded recently through the Investment in Affordable Housing Programs, referred to as the IAH or AHP. And affordable housing rents are typically 80% of the average market rent. It's not based on a person's income. Both the physical and the new housing programs include both the development of new physical stock and housing allowances and rent supplements, which are portable or could be used in private rental housing. Social housing, however, is an older form. It's been around for decades. It's governed by the Housing Services Act, and for rental housing under the RTA, by and large, some parts aren't covered, but by and large is. It's funded largely, as you mentioned, funded largely by municipalities, and also to a large extent by the federal government through the social housing agreement that the province has signed with the federal government. We have RGI units in social housing, unlike in affordable housing, where nobody pays, eligible households don't pay more than 30% of their income. And the administration oversight municipal service managers, the province, because we still administer dedicated social housing for people through our sister ministries, Community and Social Services and Health and Long-Term Care. But Ontario Aboriginal and the Ontario Aboriginal Housing Services also act to administer Aboriginal housing as well. And again, social housing includes both the physical stock and the rent supplement. It's probably worth noting that the IH, the affordable housing, the current affordable housing programs are sunsetting over the next 15 to 25 years. And that the federal funding for social housing will expire and be completely finished by 2033. On the next slide, you'll see that there's a whole housing system that municipalities are involved in. There's a variety of housing options in the system. People don't always move through the housing system. I mean, that is, it's not always the case where somebody who's homeless will eventually own a home at some point in their life. But everybody fits into this continuum at some point. You, of course, are involved in all options in the system, including caring for people who are absolutely homeless, those in shelters and transitional supportive housing, social housing, subsidized rental, private market rental, and in many cases, for facilitating home ownership opportunities, again, under the most recent programs. I'd like to bring you to the next slide and hand it over to Erin Mifflin to walk you through a history of social housing.
Good afternoon, everyone. It's nice to be able to speak to you today. We'd like to quickly talk to you about a short history of social housing, specifically as it impacts municipalities in Ontario. Basically, social housing, as Eric was saying, has been in existence for a long time, and for close to 60 years, it has been constructed in, next slide please, had been constructed in Canada based on strong leadership from the feds. But this began to change in 1993 when the federal government stopped funding new social housing construction. So after 1993, there was no new federal money committed. And in 1995, the province also canceled all new social housing construction and also did not provide funding for any new construction. In 1996, the federal government began to transfer responsibility and oversight social housing programs to the provinces and territories. And in 1999, the province and Canada signed the social housing agreement, which transferred administrative responsibility for most of the social housing portfolio from the feds to the province. And on the next slide, you'll see that in the late 90s, the province was in the process of doing a local services realignment. Because of the transfer of social housing from the feds to the province also decided at the time to add housing to the list of service system responsibilities that would be transferred to service managers. It was first announced in 1997, and Ontario was the only province that ended up transferring its social housing to municipal governments. In return, the province did upload the cost of some programs and about half of the residential education property taxes from municipalities, and also established the Community Reinvestment Fund. As part of local services realignment, 47 service managers were created across Ontario. In the north, service managers are called District Social Service Administration Boards, or DSABs, and in the south, service managers often align with an upper tier boundary, for example, a region or county, but some service managers' service areas do extend beyond their municipal boundaries, for example, the county of Simcoe. If it's a single-tier service manager area, they often align as a city, for example, the city of Windsor. And service managers plan, manage, and deliver human services, which includes areas like housing and homelessness, childcare, and income supports. The next slide deals specifically with the transfer when the province transferred social housing to municipalities, like I said. Prior to the transfer in 2001, most municipalities involved in social housing acted in the capacity as owners, not as service managers. For example, some municipalities had municipal nonprofit corporations. Some were active in partnering with the province or the federal government in various home repair programs, such as RAP. But as of the January 1st, 1998, municipalities were responsible for the provincial costs of social housing. And in 2001, the Social Housing Reform Act came into effect, and that laid out the ground rules for how social housing would be administered. At the time of transfer, service managers received most of the portfolio, which Eric referred to. What was not transferred was the rural and native programs, which went to Ontario Aboriginal Housing Support Services Corporation, federal cooperatives, dedicated supportive housing, and the Strong Communities Rent Supplement program was created and then later transferred. On the next slide, we go into a little bit of this detail on the Social Housing Reform Act. It was a very significant piece of legislation at the time. We introduced the legislation in order to obtain the legal authority to make the transfer happen. It included provisions on service level standards, which we'll talk about later. It's basically a specific number of prescribed RGI and modified units that must be maintained by service managers, how to calculate RGI subsidies, the funding formula for providers and service managers, benchmarks, eligibility, who is eligible for RGI subsidies and who's not, how to appeal those decisions, requirements for selecting households, special priority policy, giving service managers the ability to create local priorities on their wait list. Basically, because service managers at the time had limited capacity as social housing administrators, the Social Housing Reform Act was quite detailed. And now we're going to talk about the roles of key players in social housing, and I'll turn it back to Eric.
All right, on this next slide, we'll talk about the 3 levels of government and the roles of each level of government in social housing. You'll see on the next slide, we'll discuss the federal government. As I mentioned earlier, our partner is the federal government, but the agency we deal with is the Canada Mortgage and Housing Corporation. The federal government provides block funding under the social housing agreement that we mentioned, provides it to us, and then we provide it to the municipality. CMHC also provides mortgage insurance under the National Housing Act. The NHA insurance allows housing providers to obtain low-interest mortgages because the mortgages are actually insured. There's very low risk to the lender. The federal government sets out requirements for the province for the use of the funding according to the social housing agreement. So they have very specific rules about how social housing funding is supposed to be used. It also provides, in some cases, not anymore, but in the past it has provided direct lending to approximately half of the social housing mortgages. So currently today, half of the mortgages that are out there are provided through private lenders, and half are provided from CMHC directly. And that's in addition to insurance. And they're all about 35-year amortizations by and large. Some exceptions are some of the older mortgages are 50 years, but we can talk about that a bit later. The federal government requires from the province information annually, and you'll find that the information that we provide them is pretty much the information that we request from you in the service manager annual information return, but we'll talk about that later. On social housing matters, municipalities and providers deal solely with the province, the Ministry of Municipal Affairs. On federal matters, the federal government has requested and requires that we be the sole point at which they address issues. So we're always available to respond to any federal questions you have. You have to come through us. It hasn't been mentioned, you probably know this already, but Ontario is quite unique in Canada insofar as when the federal government devolved its responsibilities and administration, all other provinces took it on directly, so they're provincially administered. It's only in Ontario where we have a municipal government administering them, so it's created a protocol was developed that ensures that the province is the go-to point to discussions with the federal government. On the next slide, I'd like to walk through some of the key components of the provincial government role in social housing. We've established the broad housing policies and legislation. As I mentioned, the Housing Services Act, which replaced the Social Housing Reform Act previously. We clarified under the HSA, under that act, that our role is primarily as a steward of social housing. We loosened up, I think, although some may disagree, quite a lot of the quite prescriptive requirements under the previous act. So now municipal service managers have considerably more flexibility than they did in the past. We also publish annually the federal funding that we provide to service managers, and this is published in the Ontario Gazette, and we'll talk about that a bit more later. We make the transfer payments to the service managers, so it's through the province that the funding is provided. We receive from the federal government the federal funding on a quarterly basis and transfer it on to municipalities on that basis as well. I just want to note that not all social housing is financed through mortgages. Considerable numbers of properties, particularly the former Ontario Housing Corporation properties, which are now your local housing corporation properties, were financed through debentures. So rather than pay the debenture dollars to service managers and then get it back again to pay off the debentures, we deal with that directly. So service managers receive federal funding less the debenture amount. You don't actually see that amount, but it is being used to finance those debentures. We report annually to Canada Mortgage and Housing Corporation as per the Social Housing Agreement, and we also indemnify the federal government for any losses that it might experience either as an insurer or as a direct lender on social housing land. So this is a clause in the social housing agreement that it makes things a bit complicated. But again, I think in our recent changes to the Housing Services Act, we loosened up what were previously quite considerable requirements for municipalities to get ministerial consent to do certain things. We've loosened that up quite a bit. And the reason the requirement for ministerial consent was because we do indemnify the federal government, so we had to put fences around potential risks. Again, we'll talk about that a bit later. Also, there still remains in the HSA certain operational requirements for municipalities and providers. As I mentioned, the consent. We also set, when the transfer of social housing went to the municipalities, we established a baseline minimum operating subsidy on a per project basis. So we set benchmarks, which were the minimum subsidies that providers can expect to be received from municipalities. And we'll talk a little more about that later. And the HSA also requires that there is a centralized wait list, which hadn't always been the case, but that is now a requirement. On the next slide, more provincial key points in terms of provincial role is that there are service level standards, which are the minimum number of RGI units and physically accessible units that service managers must maintain within their service area. That's referred to as the SLS. That's outlined in the HSA. We work in partnership with municipalities and service managers to address issues or to identify opportunities. And we will continue to work with service managers on broader housing and homelessness issues as well. The province is available to share information on innovative or refinancing schemes on things that have already successfully been implemented in Ontario. In particular, as the social housing stock ages, the need for capital financing to be able to address the requirements, the repair requirements, we have been able to assist quite a few service managers in identifying ways to access that kind of refinancing required. And as I mentioned earlier, we are the conduit between the municipal service managers and the federal government through CMHC. On the next slide, we also want to point out that we facilitate mortgage renewals with private lenders. As I mentioned earlier, about half the mortgages are CMHC direct loans. CMHC has asked, through our agreement, we renew those mortgages on the 5 or 10-year terms that they are based, so we act on behalf of CMHC to do that. But the other half of the mortgages are, in fact, bundled together as they are to be renewed and put out on the capital markets for tendering, which is quite a successful undertaking. The result of bundling mortgages that need to be renewed all on the same date, and we have several dozen every month. In fact, we have 92 coming up in January. Because we're able to bundle all these mortgages together and put it out for tender, the bids we get have extremely good mortgage rates. The winner of the tender is able to provide quite cheap mortgages, and the savings are in fact realized by the providers in lower monthly mortgage payments, and ultimately, I guess, by the municipal service managers who are providing the operational subsidies. Another role that, again, we'll talk more about that later on. Another role of the provincial government is to set out under its poverty reduction strategy, what the provincial targets would be to be able to tackle poverty in Ontario. And as we mentioned earlier, we've provided the long-term affordable housing strategy very recently. Now, to talk about the municipal process, on the next slide, I'm going to pass it over to Deb, who I want to thank very much for helping us out on this presentation today.
Thanks, and good afternoon. I'm going to speak to the next few slides about the role of the municipal government and as well as the housing provider role. So the municipal government is now the administrator and the principal funders of social housing, and this came with the with legislation. Current legislation that we're under is the Housing Services Act 2011, And this act actually replaced the previous act, which was the Social Housing Reform Act you may have heard of, the SHRA. But the new act, the Housing Services Act, actually gave a lot more flexibility and more clarification to the role of the service manager. So a couple of the areas that are articulated in more clarity are around consents. Who can give consents? Where do you have to go for service manager consents now instead of having to go to the ministry, which makes a more streamlined process. The service manager now is also responsible for administering and funding the long-range housing plan. So the housing and homelessness plan services is now part of that responsibility. Reviewing LHC capital plans. Just a lot more flexibility to respond. So when a housing provider has some issues and some problems to deal with, the service manager is more equipped to provide supports in place, or if needed, if there's some compliance issues, to put some remedies in place. But if there's some difficulties where the service manager is providing, informing the ministry of any projects in difficulty, we affectionately call those the PIDs. And continued on the next slide are some additional areas that the municipal government are responsible for. So financial reports, those are the SMERs to the ministry, so there's always reporting requirements to each level of government. Responsible for service level standards, maintaining those service level standards. So the original number that were transferred, we're required to maintain those units. And we have also some flexibility on how exactly we were planning to maintain those units. So that there lies the flexibility. Maintaining the central wait list for social housing is also a responsibility of municipal level. And Ontario municipalities now own, because of housing added to the stock, they now own and operate more infrastructure than any other level of government. Just the sheer volume. I know in our area, 62 sites, 2,700 units, just added a completely different picture to the infrastructure of our regional assets. And lastly, developing the 10-year housing and homelessness plans and implementing those, also reporting on those. So there's a lot of sort of requirements tied into those plans that we're responsible for now. On the next slide, sort of is trying to explain the DSAB role, which is also a municipal level, but it has a unique features to it because it has funding and administrative responsibilities for all social services in the northern areas. So even when they're single-tiered or unorganized territories. So that means that they're pretty broad. Social services include social assistance, so your OW, your child care and housing. And they have some features that are a little bit different than other service manager areas because, for example, single-tiered municipalities, they have to provide funding to their DSAB for social housing. So they have a formula that they have to calculate as to what their proportion of the costs are going to be for housing. So it's a slightly different variation on the municipal responsibility. Continued on the next slide is some additional responsibilities for DSABs. Sorry, continued on the next slide? Yes. So limited ability to access financing because of the type of governing style that they have. It's really difficult to then leverage those properties. They're co-owned with everybody else. And the North also has its own unique challenges just because of the distance between communities and weather challenges. They have the higher costs of delivering housing services. So transportation, construction trades, utilities, just getting the services that they are needing to deliver housing is more costly. They have some also difficulty around recruiting and retaining training staff. Again, turnover, it could be more difficult to find people to make those replacements. And because of that geography, the stock is dispersed and it's difficult to know exactly where housing should be placed. Each community has a slightly different need, so how to make sure that you've got the housing in the right place. And lastly, just experiencing unexpected revenue losses. If something changes quite drastically, if you're you're dependent on a single industry and that industry closes, it could have huge impacts and changes to that community, and that's where the revenue is coming for housing. So what happens in those cases is quite significant for northern communities. I want to speak a little bit about municipally owned social housing corporations. So each municipality may have a slightly different relationship with their housing corporation. So in Ontario, the stock, if you count up everybody, all the municipalities, service managers, or DSOBs, we own 55% of the social housing stock across Ontario. That's quite significant, and that's a big change from where it's been transferred before from the province and the federal government. So there's different ways of relating. Sometimes there's indirect ownership with the LHC or the municipal nonprofit. You could have sort of more third-party removed, or it could be internal part of your organizational structure. So here at the Region of Waterloo, our local housing authority, previous local housing authority, is now merged into our regional services. It's one of our departments. So a municipally owned housing corporation may or may not be arm's length. So you have to look across the 47 service managers and see how they've decided to operate that piece. It may be, and each municipality is slightly different because you might have a two-tiered municipality or you might have a single tier. And so where does that responsibility lie? In the Region of Waterloo, it's an upper tier responsibility. It goes to the regional level. But if it's a single-tiered organization, such as Hamilton, for example, then it has a different reporting requirement. So much of the municipally owned stock was funded under the public housing program, so it's 100% RGI, those units. And under the municipal nonprofit program, it had a different kind of a mix. It wasn't always 100% RGI. I know in our municipal nonprofit we had a number of units that were market level. So it was a bit more of a mixed opportunity. The last slide I'm going to speak to is really the provider role, the housing provider role. And they're responsible for making sure that they're providing those RGI units and market housing affordable, adequate, and suitable for their tenants and residents, or members if they're co-ops. You could be a private nonprofit, a cooperative. You could be municipally owned, so a city levels. We have a City of Kitchener housing. We have a City of Cambridge housing as well. So you can have a municipal level corporation. They work very closely with the service manager with that legislation as sort of the framework, but we have lots of back and forth between each other in terms of making sure that the properties are operated well and managed well. They have responsibilities to maintain their capital reserves and ensure that their property is well maintained, so doing capital repairs and making sure long-range plans for their assets are made. How do they plan to keep that stock in good shape? Tenant management, operating the day-to-day operations, making sure tenants, the units are filled, and when they're vacated, there's new units, new tenants brought in, using that central wait list for their RGI units. And then ensuring their financial viability, so making good decisions about how to spend the money, especially around capital reserves. They're tight budgets, so you have to make sure those decisions are well made. Thanks.
Thanks very much, Deb. Returning now to relevant legislation and agreements about social housing. The first slide in this portion of the deck is just an overview of the social housing agreement. I won't spend a lot of time on it. We've already discussed it. Basically, the takeaway is the majority of Ontario's social housing units fall under this agreement, and it was signed in '99. Turning to the next slide, it shows the decline in federal funding, which Eric has spoken about, how it's decreasing year over year with the eventual end of total federal funding in 2033. On the next slide, it sort of summarizes at a high level what the social housing agreement funding allocations are based on. Basically, the federal SHAW funding that the province receives from CMHC is based on the federal share of social housing costs from 1995 through the social housing agreement, which was signed in 1999. Province established the Strong Communities Rent Supplement Program, which provides $50 million annually to service managers for rent supplements until 2022-23, and we also established the federal funding distribution model, which we'll talk about later on. On the next slide, again, we're talking about funding allocations. The Service Manager Gazetted funding for 2013 was approximately 80% of total federal funding. The other federal funds that receive, the other areas that receive federal funding but aren't included in the Ontario Gazette is the Strong Communities Rent Supplement Program, supportive housing that it's administered by our sister ministries, rural and native housing, and the federal share to unorganized territories. Now, the provincial share of social housing costs include the unorganized territories social housing costs, rural and native program costs, dedicated supportive housing. Eric already explained how the debenture costs included in gazetted funding, what a debenture credit is, how we pay it back, so I won't go over that again. On the next slide, slide 33, is really for your reference. It's an overview of the social housing agreement programs, and it's organized by which programs provide RGI, which programs have operating agreements, and which programs are included in service level standards and who it is administered by. So we even find a table like this useful for our purposes, so I encourage you to revisit that if you need to. On the next slide, we are just giving you a quick overview of the Housing Services Act. So it replaced the Social Housing Reform Act effective January 1st, 2012. It provides greater flexibility to service managers to deliver community-based programs while also strengthening accountability. It was designed really to clarify the roles and responsibilities of service managers and to reduce the administrative burdens when service managers are administering social housing. Generally, the HSA provides for community-based planning and delivery, housing and homelessness services with broad provincial oversight and policy direction, and also providing flexibility to service managers, like I said, and to housing providers while retaining certain requirements which are listed in the slide, and I won't go into great detail on.
Okay, on to the next slide. We're into the Money Matters section. The next slide will outline what we'll talk about in the next few minutes. I also recognize that we're coming close to the end of our session, so I'll move it along a bit quicker so we have time left at the end for questions. On the next slide, you'll see social housing subsidies. As I mentioned earlier, we transfer federal funding to municipal service managers quarterly, April, July, October, January. The multi-year gross amounts are published in the Ontario Gazette, and the quarterly payments are net amounts. It doesn't show the holdback for service reimbursement on the debentures, as I mentioned. On the next slide, we talk about the subsidy formula. Benchmarks I mentioned earlier. Benchmarks were originally intended to set a baseline for minimum subsidies provided on a project level. In fact, and they are updated annually. They include things such as operating costs such as admin and maintenance, utilities, insurance, capital reserves, and bad debt. It also benchmarks expected revenue from market rent, so the market rents are sent through that, as well as any non-rental revenue and any vacancy loss. It was established initially with in close collaboration with our housing partners. Annually, it's increased to reflect changes in the inflation and in the consumer price index. And there is an opportunity at any point for a provider, a housing provider, through their service manager, to request a change to one of their benchmarks if there are circumstances in the provider's operating circumstances that have changed that will, in fact, have an adverse effect on their ability to maintain the housing at the current subsidy level. Those requests come to us. They're actually very rare that you find a provider has something that is like an ongoing change to their circumstances, but that opportunity does exist. On the next slide, I'd like to bring your attention to the federal funding distribution model which we use. Essentially, it determines how much of the federal funding each service manager receives. You'll note that in the older public housing programs, currently 51% of the subsidies are provided through federal subsidies and the remainder by municipalities. It's slightly higher for the later nonprofit programs. It's 60 federal and 40 municipal sources. And the rent supplements, there are various rent supplements, and the funding formula changes depending on the supplement. It changes from time to time according to the program guidelines. I do want to point out, though, that when we provide the funding to each service manager as per the gazetted amount, we do so in the form of block funding. So even though as time passes and federal funding decreases because mortgages are being paid off and operating agreements are ending, it is project specifics do have an outcome, do have an impact on it. We don't provide the funding to the municipalities to be used on a project-by-project basis. In other words, what I'm saying is we provide the dollars. It's up to the municipal service manager to determine for the best end how much of that block funding each project will actually get. And of course, aside from the minimum benchmarked amount. So that's an important point I want to make, that we don't track and expect dollar for dollar project-specific funding to be used that way. It is block funding. On the next slide, talk a bit about untargeted funding. That's a bit of funding that, due to the changes in the ongoing operating costs over the years, there is some funding that allows us to provide a little bit of, I guess, so-called savings, which we provide to each service manager annually. And these so-called untargeted funding, which don't align specifically with the project requirements, each service manager gets a portion of that funding, and it is it's in the gazetted amount, but the portion they get is based on how much social housing, how many social housing units they have relative to the provincial total. So it is based on a ratio. Every year, you get a letter from our ADM, Janet Hope, outlining what the funding will be, and we update that on a 5-year stretch every year. So you have a 5-year window to know how much federal funding you'll be receiving for social housing, and that's, as I mentioned, mentioned in our gazetted amount. On the next slide, there is we're going to talk a bit about service manager annual reporting. I don't know if it's particularly onerous or not, but we do require you to fill out a service manager annual information return, a SMARE. And essentially, the request, the information we're getting from you on the SMARE is basically the same information that we're required to give CMHC annually. Basically, you're indicating that you're in compliance with the Housing Services Act service levels. Some general information, rolled up information on social housing by program. It's not done by program, by project, and statistical information on unit and client size types. You provide to us a breakdown of gross expenditures by program, and you indicate that the amount of the federal funding that was provided and the actual expenditures you needed. As I said, we provide this to CMHC as well. On the next slide, a bit about the Gazette. I won't go through it again. That slide identifies where on the internet you can find there's a link to the Gazette. As I mentioned, we are trying to keep 5 years ahead, so you always know 5 years ahead what the amounts will be. I've identified already how the untargeted funds are distributed, and debenture funding is included in the gazetted amount. Okay. Also, in the next two slides, you'll find a total of all the 47 service areas of the gazetted funding from 2015 to 2019. Essentially, it's just for your reference. I'm not going to speak to it. On the next slides, I'd like to talk to you, and we're just in the end of the webinar now, about the centralized mortgage renewals. As I mentioned earlier, as mortgage terms expire and need to be renewed, which is usually every 5 or 10 years, we identify which mortgages are renewed by which month, and we go to the capital market with it. As I mentioned, the capital market then makes bids on this tender, and the lowest bid wins. It's very straightforward. Once we've identified the winner, these mortgages are then securitized as mortgage-backed securities, which means that the federal government, again through CMHC, provides guarantees for those mortgage securities, so it's very appealing to private lenders. The result of this is that you get extremely good competitive rates over these 5 or 10-year term mortgages. But the downside is, because these are turned into mortgage-backed securities, they have to be absolutely pristine. There's not a lot of flexibility about what you can do with that mortgage as long as it's an MBS pool for that period. So it does provide some challenges. For example, if you're looking to refinance the existing mortgage, to extend it or increase it in order to access financing for repairs, for example. Mortgage-backed securities cannot be can't be sort of messed with during the term. However, when the term expires, you can do all that. But it's in fact impossible to be able to change a mortgage in any details about it once it's already been signed in that term. Our job is to coordinate the renewal of these mortgages, as well as the ones I mentioned earlier from Canada Mortgage and Housing Corporation. So you'll receive letters from us, or you'll receive copies of letters from us to housing providers 4 months prior to the renewal, requiring some information about them, about the mortgage that's going to be renewed. You're also copied on all the information that we provide to providers on the winning bids and what the new mortgages amount is. We provide to you directly a letter when mortgages are renewed, identifying the monthly savings that so that you can adjust your monthly subsidies to your providers accordingly. And you'll receive those letters from us within 7 working days after the tenders close, which is usually towards the end of the month. And I guess that's pretty much it for this webinar. I'd just like to thank you for allowing us to talk to you. If there are any questions, we can deal with them now. But before we go to that, I just want to identify in the next slide the contact. If you want to contact either myself or Aaron, it's on the next slide. And the slide after that will show you what I'm just going to deal with it quickly now, what we're going to be doing a week from now in terms of the next webinar. We'll be talking about the service level standards, the decreasing and end of federal subsidies, the physical stock and the social housing as a municipal infrastructure item, asset management, opportunities for service managers to adjust to subsidies, also an opportunity to discuss housing providers and what are their issues and opportunities. Webinar 2 is also a great opportunity. If you have any questions that you thought of after today's webinar, you can ask them at that time as well. So, if there are any questions that you have at this point, I'm happy to take them.
All right, thank you, Eric. I just want to let everybody know you can enter your questions into the chat box that's in your control panel. We have 5 minutes left. If your control panel has collapsed, just hit the red arrow to expand it and then type your question into the chat box. And our first question is, the Act indicates that we must participate in the natural gas program. However, participation in this program is costing our county an additional $60,000 per year in gas costs. What process is required to be exempt from participation in order to ensure that we are getting the best value for our dollar?
Hi, it's Keith Extance here. Again, this is an issue that we've heard from a number of service managers and housing providers over the years as well. I think probably what's best for you is to talk to HSC and let them know about your particular concerns, hear what they have to say. But there is the ability within the Act, and it's through ministerial consent by which an LHC can get the consent of both the service manager and of the province itself to withdraw from participating in that particular gas program. So like I said, my first suggestion would be to talk to HSC and let them know about your concerns and see what they say in terms of response to it. And again, you still have the right to go through the ministerial consent process.
Thank you. Eric or Aaron or Deb, just wondering, what are some of the key questions that people ask you regarding social housing?
Generally, from time to time, we get questions from some service managers about there's a lot of very fine details in the Housing Services Act that may or may not be top of mind for people. Specifically, it's like I mentioned, it's fairly prescriptive about how to deal with projects in difficulty. We get questions about what constitutes a project in difficulty. I mean, service managers are required to notify us. There's a very specific process in the HSA about how to notify your provider and identify it as a project in difficulty. It tends to be the things that don't come up from regularly, that from time to time service managers do need a little reminder of how it works. And I want to remind anybody, if you have any questions at all about anything that you think is maybe unclear or doesn't seem apparent to you, feel free to call us. We're happy to deal with those questions. The other area that I get quite a bit is, as I mentioned earlier, the mortgages. I know that for many of us who have our own private residential mortgages, we know that if we wish to, for a small penalty, we can change our conditions of our mortgage to increase it or extend it in the middle of a term so that we can access additional financing. And so we get a lot of folks who, in an attempt to access financing for repairs and to get the capital needed to do that, wonder why they're not able to change the conditions of the mortgages. And because these are not residential mortgages, these are technically commercial mortgages, and because they're in the mortgage-backed security pool, it's very difficult within a term to change any of the details of the mortgage. You're more or less stuck with it until the terms expire. There's generally sort of the two kind of areas that we get a lot of questions about. Yeah, I think that's pretty much it.
All right, thank you. We're out of time now, so I'd like to thank everyone for joining us on today's webinar. For additional resources on a broad range of topics, please visit MFOA's virtual library. The library is your one-stop shop for policies, RFPs, guides, legislations, and regulations from across the province. You can visit the library at mfoa.on.ca/library today. I'd like to also remind everyone that the second part of this webinar is next week on Wednesday, October 22nd. So if you haven't already signed up for it, you can go to our website and sign up there. And I'd also like to thank our speakers, Eric, Aaron, Deb, and Keith, for talking to us today and answering our questions. Thank you all, and bye for now.